Good afternoon, everyone. Good evening, depending on the location you are joining us from. My name is Indigijo Anna Mabula, and I will be serving as your moderator for today's Open Export series for the month of April. I'm particularly excited about this topic as today we'll be diving into managing currency fluctuations and exchange risks in international markets. But before we start, I would like to take you through the agenda for today. We'll start with an introduction. We'll tell you what we do at AFC, our programs, we are serving agripreneurs within the agri-food community. And we'll move on to our speaker presentation. We'll have an expert who is coming in to speak on this topic, and we have an opportunity to ask questions and answers. So do well to take your writing pen, your jotters, your notepad, your phones, anything you have close to you. So you can jot down your questions and ask them during the Q&A session. And then we'll have a membership drive and we'll be closing with our next steps and any other announcements we might have. So we'd love to know you. Is this your first time joining the Open Export series? Introduce your name, your country, your agribusiness. This is an opportunity to connect with like-minded persons within the agri-food space. So this is how we're going to do it. Hi, everyone. Or whichever format that actually suits you. My name is Anna Mabula from Nigeria, and this is my agribusiness. So for me, I am the communications officer at AFC. So let me see you introducing yourself, meeting people, and also you can go for that to even drop your favorite emoji. Like what emoji right now describes how you're feeling? Excited, expectant, are you tired? Are you happy? Are you looking forward to this? Are you anticipating? Let's see the emojis that describe how you are feeling right now. So I can see Mariam Sanusi Sani. She says she's from Nigeria and she's into tiger powder and millet ground. And I can see an emoji. Someone is smiling. I guess is excited and pump up for this session today. So while we have more persons come up to introduce themselves and more persons join us, we'd love to take you on what we do at AFC. I know a number of persons are already familiar with what we do at AFC, but we always have new persons joining us every day. So for those who are joining us for the first time, we'll be taking you through what we do at AFC and our programs. And for that, I'll be calling up Busha Abdurrahman, the program officer at AFC. But before hand over the podium to her, I can see Irene Barnabas from Lagos, Nigeria, Dr. Sambo, who is into poultry, fish, and sheep. I can also see someone from Malawi. Finally, we have a non-Nigerian. Maxon, who is the CEO of Umbuzu Coffee. It's amazing to meet you. Let's keep the introduction coming. So I'll be handing over to you, Busha. Hi, Busha. Over to you, please.
Thank you so very much, Anna, and good afternoon, everyone. Welcome once again to today's session. So, for those who don't know already at African Food Change Makers, we are a not-for-profit organization that is very passionate about getting people in Africa who are into agriculture, about getting them to have a profitable and sustainable business, and also to ensure that as you are doing the business, you are making profit, your business is scaling up, and you see it as a very good avenue that is enough to sustain you and your family as well. So, who are we? Here at African Food Chain Makers, we believe that SMEs are the lifeblood of the food ecosystem in Africa because these people, they are driven by visionary, dynamic, and innovative entrepreneurs. These entrepreneurs we talk about at AFC across everyone performing in one value chain or the other in agriculture. We have the primary producers, the aggregators, the distributors, the finance and technology providers, the chefs, the cooks, the consultants, and the innovators. All of these people together, we call them change makers. Next slide, please. So what is our mission? Our mission is to enable African entrepreneurs to start and scale a resilient and sustainable agribusiness that fits Africa and the world. How do we do this? We provide entrepreneurs in Africa with funding opportunity, training, market exposure, trade leakages, and also a vibrant community of change makers. In this community of ours, if you're a member of this community, you are able to meet with anyone, like everybody across the agricultural value chain in Africa. Are you a farmer who needs mechanization, or you are someone who's trying to adapt climate smart agriculture and you don't have a vendor who can help you to set up your farm? All of these people are who you can find in the community. Or you're even a producer, but you need someone who can provide you with raw materials. That is why we have this community. Once you're a member of this community, you have access to every other person who are a member of this community as well. So down to our vision. Our vision is to enable a million successful and sustainable African agribusinesses that are transforming the food ecosystem and recognized across the globe. We don't want it to just be limited to your local country. We want it to be known African-wide, like when your business is being mentioned, like someone in Ghana, if you are a business set up in Nigeria, someone in Ghana should know about your business. That, wow, I know this business. This person is into agriculture and is from Nigeria. When you are being mentioned in the UK, someone should be able to attest to knowing your business. So that is what we are looking at achieving with our community, and which is why we are here. So also, like I said earlier, one of our ways of supporting agri-SMEs is by providing them with trainings, visibility, resources, market exposure. So these trainings tailored to some of our programs, which we've established to provide to SMEs and help them to like scale their business. These programs are designed into three categories. We have a program that is designed for climate smart agricultural practices. Are you trying to like adapt to the climate changes? You want to know about what is even climate, um, um, what is climate change? You'll be hearing a lot about climate change, but you really do not understand it, and you really want to know, okay, what is climate change about? This program is for you. It explains what is climate change, how does it impact your business? What can you do to ensure that the negative effects of climate change does not affect your business? And also, if there are already some effects of climate change in your business, how do you mitigate it? What do you do to resolve what has been the damage? And how do you also prevent this damage from happening in the future? So that is what the Brace program is about. And currently, the Brace Corp application is on. So if you've not taken part in this Brace program, please, my colleague is going to drop the link to the application in the chat box. Hurry now and register for this program. It's a very interesting and an exciting program. And it's not a long thing. It's just a 6 weeks intensive training. But trust me, in that 6 weeks, what you will gain, what a million. Just ensure you register for this program. And do you also know there are entrepreneurs in Africa who can benefit from this? Please hurry now and share it to them. Let everyone be a part of this training and let's benefit it all together. So our next program is Leading African Women in Food Fellowship. This program is a very interesting program, and I'm personally passionate about this program because for we women in the agricultural sector, people don't really get to know us. When agriculture is being mentioned, what we think about is men, 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 men. People don't really recognize the good efforts women are making in the agricultural landscape. So, which is why we've designed this program, because we want to showcase the women in agriculture. We want to celebrate these women. We want the world to see these women who are doing great things in agriculture. So this program is open to all women performing in any sector and value chain of agriculture in Africa. We have different categories. We have ecosystem enablers. Are you working in the policy sector? Are you working in the consulting firm but working towards agriculture? Or do you have some great initiatives that is supporting agriculture system in Africa? This program is for you. We have the disruptors. Do you have it? Is there an innovative way you've designed to get to do things better? Yes, this program is for you. Come into the program. Have you disrupted the way things were formerly done? Have you brought in new ways to do things and like, wow, this is the best and the first of its kind? Yes, this program is for you. And we also have chefs. Like you are doing amazing well. You are a great chef. Like you need to be known. Let people know you. Let it not just be like just men and men and men and men. We need women. So please apply for this program. So currently, this program is currently ongoing, but the application has closed for this program. It's a very long program. We take it for 6 months, and so the application for this year has closed. But then please watch out for the next application which will be releasing towards the end of the year. look forward and watch out for you. Please stay in touch and make sure you follow all of our social media pages so as to get to see this program once it is out. Also, lastly, but not the least, we have the Scaling Exports program. I guess the reason why we are here today is because we are willing and ready to learn one or two things about exports. And this program has been designed to give you the knowledge which you need to know about exporting. Do you want to get your product out of your home country and see it in other countries? You want to go into intra-African trade? Or you've been hearing about AFCFTA and you don't even know what it's about. Like, what is this everybody has been talking about? Why is everyone saying it? Come into this program. You are going to know it. You will know all about exporting. Or probably you've been exporting before, but you're having some challenges in terms of your logistics, in terms of finding international buyers. This program has been designed for you. Well, so far, you're interested in exports, watch out for this program. Currently, the program call for application is not out yet, but as soon as it is out, you are going to get the information, and also keep an eye on our social media pages. And also know that this Open Export series, which we are here for today, is also a component of this program. So even though the intensive training itself has not started for this year, this is also an avenue to make sure that knowledge keeps growing and we keep sharing, imparting the community with knowledge that is needed to export. So please join us every month. We do this every third Thursday of the month. So please ensure to always watch us for this link and ensure you join these sessions going forward. Thank you. Over to Yana.
Okay, thank you so much, Bushra. Another of our programs at AFC is the Changing Narratives, where we engage media, content creators, the chefs, the cooks, and stakeholders within the food and creative industries to tell compelling stories about promoting our African heritage, African food. Most people, they see the face of Africa as a hungry child, but with the Changing Narrative project, what we do is we change that perceptive, especially for the Western world, on what it means, and what they should know about African food, how chocolate is originated from Africa, same with fonio. We do that through documentary videos, food festivals, and also our podcast. So you can check out our social media pages and our website to be able to see the multiple informations and content we create as in regards to the Changing Narrative program. Next is we would love to hear your export stories. I know a couple of persons here have started exporting, while others haven't started. So if yes, what has been your experience? What has been your challenges? What has been your wins? And if no, what is hindering you from exporting? Feel free to raise up your hand, use the raise hand feature on Zoom, or type it on the chat box, and we'll do well to read it. So who would love to share? Who is the first person? What has been your export story like? Has it been amazing? What has been the challenges? And what have you learned actually on the journey? Because there would definitely be somebody here who would learn. From our last session last month, we had a couple of persons share. And from there, we figured out somebody who had issues with logistics, was able to find somebody who didn't have any issue with logistics. And boom, solution solved. So what has been your challenges? What has been your experience like? To do well to share in the chat box. You can raise up your hand to share your experience also. While we are waiting for persons to share their experience or also drop it in the chat box, I would move on to introduce our facilitator for today's session. So our facilitator for today's session is Mr. Bamidele Ayemibo. He is a distinguished figure known for his expertise in international trade and business development, holding titles as an author, international business coach, and a keynote speaker. He's a prominent AFC FTA ambassador, consultant at 3T Impex Consulting Limited, a renowned trade consulting firm. He focuses on enhancing trade knowledge and volumes in African countries. He is popularly known as the export doctor. He recognized export business readiness assessment program. His extensive trade certifications, including one of the first 10 certified specialists in the demand guarantee which showcases his commitment to excellence. He also has a master's degree and PhD in international trade and also plays a significant role at the Lagos Business School. Beyond his contributions to trade organizations, Bamidele hosts an online TV show, writes blogs, and have authored 7 trade books. He's a sought after speaker and facilitator for international trade and finance training programs for most commercial banks in Nigeria, including the Central Bank of Nigeria and others. With a sounding virtual clap and all the emojis you can use, let us celebrate Mr. Bamidele as he comes to share from his wealth of wisdom and expertise. It's a pleasure to have you on today's session, Mr. Bamidele, and we look forward to learning from you today. Over to you, please.
Yeah, good afternoon, and thank you very much. Can you hear me, please?
Yes, I can hear you.
Can we confirm from other participants if they can hear me?
So if you can hear Mr. Bamidele,
Please drop a
yes,
message
use
in
the
the
thumb
chat.
box, show how you're excited, use all the best emojis you can think about. Yeah, so they can hear you, sir.
All right, so we're discussing a very, very interesting and also very important, a very important topic today in this particular program. Now, the reason why this is very important is because of the peculiarity of exchange rate, particularly in Africa. It's a big challenge in Africa, and the reason why it's a big challenge in Africa is because a number of African countries have challenges with export. And if you are not able to, if you are not able to export well enough, then you will have big issue with exchange rate. You have big issue with exchange rate. And that's what we're trying to solve today. If you are also here, you are an importer, you import products. You also need this because you might be able to use your export to support your import and fix the challenges of exchange, of foreign exchange risk. And fix the challenges of foreign exchange risk. So I'll be speaking to you briefly on managing currency fluctuation, exchange rate risk.
In progress.
In international market. Managing currency fluctuation and foreign exchange risk in international market. I have a preamble, then I will talk about different options. I call them prototype, forward, futures, options, currency swap, natural hedge. Then I'll round off with a conclusion. If you look at the chart on the screen for many countries in the world, this is the way we generate foreign exchange. Trading goods, trading services, foreign direct investment, foreign portfolio investment, and remittances. Of all these 5 major ways of generating foreign exchange in any country, the one that we have control over, any country have control over, is trading goods and trading services. It's trading goods and trading services. Foreign direct investment, foreign portfolio investment, someone will decide that they want to invest in your country. And that will be based on a number of factors, which we include, that will depend on a number of factors, which we include security, stable economy, and a number of other factors depending on individual. This is why taking control of your foreign exchange by increasing trading goods and trading services become very, very important. I'll use Nigeria as a case study. You can see the decline in foreign direct investment and foreign portfolio investment. And you can also see the contribution of non-oil export to export from Nigeria. Also in Nigeria, oil prices are going down now, but Nigeria rely heavily on crude oil and gas exports. And this is the story of many African countries. For other African countries, it might not be crude oil, it might be metals, it might be copper, like we have it in Zambia. But many African countries rely a lot on commodity as a major foreign exchange earner. That means fluctuation in the price then affects the country. For Nigeria, non-oil exports revolve around this product. You can see the total, 61 billion, but non-oil export is 7.4 or 7.5. What that means is that a shift or change in the crude oil, in gas, affect inflow of forex and export volume, and consequently affect the exchange rate. Foreign exchange management refers to the strategy and the practice used by businesses, government, and investors to handle currency transaction, mitigate exchange rate risk, and optimize international financial operation. International financial operation. Here are some of the aspects of foreign exchange management. Number one, the foreign exchange market. And this fluctuates, the exchange rate fluctuates based on a number of factors. Inflation, interest rate, other economic data, and of course, geopolitical events. If you are familiar with what is happening right now in the US, the people are dumping US treasury bonds. They're selling off. That's reducing the price. That's affecting the currency of the US. That's affecting the currency of the US. And that should have a positive impact on other currency. But for Nigeria and other African countries that depend on crude oil, it's not having impact. Why? Because we're also undergoing depreciation against dollar, even though dollar also is coming down because of the crude oil price going down. Determination of exchange rate depends on law of demand and supply. If there is more demand for local currency value goes up. If there is more demand for foreign currency, local currency go down. Higher interest rate attract investors, and that will strengthen currency. Country may intervene in the forex market to stabilize the foreign currency also, to stabilize the exchange rate, because if you don't, then it might affect the value of the currency of the country. Now, all these are important for you as an exporter. And the reason is simple. If you don't understand the concept of foreign exchange and how to manage it, and you are trading in a foreign currency, when your inflow coming as dollar, euro, or pounds, is going to affect your payment. The local currency you get in Ghana cedis, or in Kenyan shilling, or in South African rand, or in Nigerian naira, is going to be lower. And that leads to the risk, transaction risk, that loss due to foreign currency fluctuation between the invoice and the payment date. Transaction risk. I exported dollar. I remember I did an export many years ago. Euro then in Nigeria to naira was 210. When I got paid, euro was 190. That's a transaction risk. Translation risk. Financial statement of multinational company get affected when converted to home currency. If I hold a larger chunk of FX in my account as an asset for the company, when I'm doing my end of the year financial reporting and the financial statement is being prepared, the value of the company, the balance sheet of the company, is affected by the exchange rate. Either the value of the company goes up if the exchange rate is favorable, or the value of the company goes down if the exchange rate is unfavorable. Economic risk. For a country, if your exchange rate is low, if the value of your currency is low, it makes you competitive in the export market. If the value of your currency is high, it makes you uncompetitive in the export market. It makes you uncompetitive in the export market. Someone said, I really love this information, but the presentation is in English. That's someone from a French country. Unfortunately, I can't speak French, even though I can read a little bit in French. But I can't speak French, so I can't interpret for you. So minimize foreign exchange risk. You need to hedge. So for the rest of this conversation, I'll be talking about how do you hedge, because we are talking about managing the foreign exchange risk as an exporter. So my focus will be, how do you hedge? How do you protect yourself from the risk? How do you hedge? What are the options available for you as a business to be able to minimize the risk you face as a business? That's what I will be spending the remaining time of the session discussing. Hedging strategy, forward, swap, options, natural hedging, and diversification of investment. Foreign exchange regulation. Most countries have foreign exchange control policy set by the central bank. They regulate the exchange rate limit. They regulate international capital transfer. They regulate foreign investment and trade payment. Foreign investment and trade payment. Now, when you are doing international trade transaction, most of the time you don't have control over the currency of the transaction, particularly if you're an SME. Most of the time, the buyer sometimes have control. Sometimes bargaining of the buyer, of the parties. Sometimes regulation of your country. Sometimes the convention, the way this trade is typically done around the world, like crude oil and gas is typically traded in US dollars. So I'll be looking at each of the, which is the major cross of this conversation, the option, the different types or ways you can hedge and manage and minimize the risk of foreign exchange in your trade transaction. Number one is forward contract. What's a forward contract? I want to export. After this export, I'm expecting some payment. However, I sense that let me use Nigeria as an example. I sense that the currency value is going to depreciate in 3 months from what I can see in the economy. I can go to a bank and say, can we agree on a forward contract? Now, when a bank is agreeing on this, sometimes also they are talking to someone else that they will match you. So the bank is not exposed. And what will happen is, the rate in Nigeria right now, let's say it's 1.5, and I sense it to be more than it will be 1.550 in future. And I tell the bank, can I do 1.510? And it's okay, fine, we'll give you 1.510. Now, that means in 30 days or 60 days time, I'm supposed to provide $100,000 and they will give me Naira based on 1,510. In that future date, when my money come in, if the money does not come in, they will still debit me and I'll have to pay it. They will credit me with the amount, $100,000, and debit me based on their rate agreed. Most of the time, because the bank asks someone else. What this means on forward is that when you sign the forward, it's binding. You must make that fund available. So my recommendation is if you know that the money is coming in 2 months, you can agree, sorry, in 2 months, can agree for 3 months. So that if there is a delay between when your money is supposed to come in and when the expiration period, you are not unnecessarily exposed. You are not unnecessarily exposed. Why is this important? Why is this important? The reason why this is important is because the bank is going to sell this dollar to someone else who have shown interest. So if you fail, it's going to affect the bank. So when you come into a forward contract, you cannot wake up tomorrow and say you are no longer interested. It's not acceptable. It is a binding contract. It is a binding contract. It is a binding contract. You cannot pull out from it. You cannot pull out from it because the bank also have commitment. Now, the good thing is that there are other arrangements where you can pull out. There are other arrangements where you can pull out. Because there are other arrangements where you can pull out, then you can decide to go for that. Now, sorry, 1 minute. 1 minute, please. Okay. A forward contract is a customized financial agreement between two parties to buy or sell. To buy or sell a specific amount of foreign currency at a predetermined rate on a specified future date. If you are doing a spot contract, it is immediate settlement, usually within 2 days. If you are doing a forward contract, it's for a future transaction. When business engage in international trade, they are exposed to foreign exchange risk. The risk that currency fluctuation will affect the value of the future transaction is the exchange rate risk. The forward contract helps mitigate this risk by fixing the exchange rate ahead. A US company expects to receive 1 million euro in 3 months. If the euro weakens during the period, they will receive fewer dollars. To avoid this uncertainty, the company enter into a forward contract to sell the 1 million euro dollar today at an agreed rate and locking that rate for the future. And locking that rate for the future. The amount, currency pay, and settlement date are tailor-made. Typically, no upfront costs unless there are margin requirements. Both parties must honor the contract at maturity. It is used to hedge against adverse currency movement. How do you use it in practice? Importers use forward contract to lock cost of paying for foreign supply. Exporters use them to fix the amount they will receive in their home currency. Investor hedge international investment to avoid loss of currency swing. Multinational corporations use them for budget certainty in cash flow. What is the benefit? What is the benefit? Protect currency volatility, offer financial certainty, you know exactly what you will get, help with planning and budgeting, and there is no need for immediate cash outlay. Risk, no upside participation if the exchange rate move favorably. That's the risk. If the rate move in your favor, so Remember, I agree 1510. In that analogy I gave you, I agree 1510. In that analogy I gave you, I agree 1510. If the rate move in my favor and I will get more naira, I cannot benefit from it because it is a rigid arrangement. It doesn't allow flexibility at all. Can result in a loss if the business needs to cancel or change the contract because they will debit you. Credit risk if the counterparty default. Re-analogy. Imagine expecting export proceeds 6 months away. You agree to pay $100,000 regardless of future exchange rate changes. If the rate goes up, you save money. If the rate goes down, you lose opportunity for savings. But you had certainty all along. Let's look at future. Future is a modified version. Future is a modified version. Future is a modified version. It's a modified version because it's still similar to forward, but it's done for particular amount, particular period, particular amount, particular period, and under the control of an exchange. Future is a standardized agreement to buy or sell specific amount of currency at a predetermined price in future. Unlike forward contract, future are traded in an organized exchange, not just between you and your bank. In Nigeria, for those in Nigeria, it's done by FMDQ. FMDQ. Just like forward, future contracts are used to hedge against currency risk. Business investors, speculators use futures to protect the value of their cash flow. Let's say a Nigerian company is planning to export goods from the country in 3 months and expect payment in USD. If the naira strengthens, the naira payment will become lower. To hedge this risk, the company can sell the dollar future contract. This locks in the price, so even if the naira strengthens, the company is protected. Let's look at the difference between forward and futures. Traded volume, traded venue. For forward contract, it's over the counter with your bank. But for futures, it's on exchange, an exchange. For forward, it's customized. For future, it's standardized at a particular figure. For forward, usually at maturity. For futures, daily mark to market. For forward, higher, no clearinghouse. Counterparty risk higher, no clearinghouse. For futures, there's a clearinghouse, so the risk is lower. For forward, it's less liquid. For futures, there is more liquid due to active market, a lot of participation in the market. So the market is liquid, there is enough funding for the transaction. So it's standardized. For example, a euro contract might be for $125,000. There's an amount. It has expiry date, March, April, May. There is a date. Require initial and maintenance margin. Now, let me say something on this margin. So let's look at the $100,000 I talked about earlier. So let's say the exchange rate is 1,500. I agree with the bank for future. If it is forward, at maturity, I provide the whole $100,000 to the bank. The bank gives me 1,500 times 100,000 in naira. That's 150 million naira and case close. But if it's a future contract, if the rates move up, no, let's say the rates move up. If it's a forward contract I did and it was 1.5, I agree, and the rate move up at 1.510, the bank will still give me 1,005. Now, if I do future, if the rate moves to 1.510, you see that 10 naira difference on top the bank will give me. But if the rate goes down at 1.490, I will be the one to give the exchange the 10 naira difference. What that means is that the total amount is not what is going to be brought to the exchange. The exchange just pay for the difference. Because if I come to the bank and I want to buy dollar at 1.5 and the rate move to 1, that means I have the 1.5. If the rate move to 1.510, then the difference the exchange will give me at maturity. But if the rate go down at 1.490, you see that difference of the 10 naira difference? That 10 naira difference, I'm going to give them because I already have 1.5. Now, benefit: transparent pricing on exchange, low counterparty risk, daily settlement, gain or loss are settled daily. So they always have liquid to maturity because they make provision for the differences every day. Benefit: transparent pricing in exchange, low counterparty risk. It can be bought or sold easily. High liquidity. Risk: less flexible due to standardized terms. Daily margin call if the market move against you. May not perfectly match the company exact need because of the timing, because they have timing, and of course the amount, because of the amount. Who use future contract, importer and exporter, to hedge foreign payment or receipt? Institutional investor with institutional international portfolio, speculator looking for profit. They're just speculators. They take a position, and if rate move in their favor, they make margin. Hedge fund for trading strategy involving global currency. Analogy, real life analogy. Think of a future contract like a pre-ordering a concert ticket through a ticket exchange. You lock in the price and quantity. There is a system in place to make sure both sides deliver. You can't exchange the date or the number of tickets, but you get security and trust in the system. The beauty of future is that the platform ensures everybody performs. So default rate is very low. Option. Please think of option as an insurance. Remember, in forward, it's rigid. When you go in, you must exercise that right. You must buy at that price you agree. In option, option give you option. Option give you option. Option give you option. Option give you option. Option give you the option of buying or not buying at maturity. For example, if I do an option arrangement, when payment is due, if I agree with the bank 1,500, when payment is due, the rate has moved to 1,550. I will ignore the bank and go and sell at 1,550. It gives me the option of either selling or not selling at the agreed date. It's flexible, but I pay a fee. Remember, in forward, you don't pay a fee. The bank just get a margin on transaction, but this one I'll pay a fee for the service being rendered to me. It gives the buyer the right, but not the obligation. It gives the buyer the right, but not the obligation to buy or sell an amount at a predetermined future date. You pay a premium for this flexibility. Similar to how you might pay for insurance. So it's like you're insuring your proceed as an exporter, or you're insuring your transaction as an importer. FS options are used to hedge currency risk while maintaining upside potential. That means you are protected if the market move against you, but you can still benefit if the market move in your favor. There are two types of options. There is call, that's buy. There is put, that's sell. When you say I'm doing a call option, I want to buy a foreign currency. When you say I'm doing a put option, I want to sell a foreign currency. A US company expects to receive €1 million in 3 months. If the euro weaken, the company gets fewer dollars. Instead of locking in the rate with forward, which is not flexible, the company buy an option to sell 1 million euro at a specific date. If the euro drop, the option protect them. If the euro strengthen, they will ignore the option and sell at a better price. So option give you option to sell at a better price if the rate is more favorable at maturity. The rate you agree is called the strike price. The fee you pay for the service is called the premium. It has an expiration date where you exercise your right. You can exercise if you do European option. You cannot exercise until maturity. You can't sell or buy until maturity. If you do American option, you can sell or buy before maturity. You don't have any obligation to exercise the option. You are not under any obligation to exercise the option. That is the beauty. You are not under any obligation to exercise the option. Protection against unfavorable currency movement is one of the benefits. Opportunity to benefit from favorable moves in exchange rate, another benefit. Flexibility in managing risk, another benefit. Risk upfront premium payment, usually very high. It may expire worthless if the rate is more favorable. More complex than forward and futures because of the calculation involved. Common users, importer and exporter, wanting to protect without giving up gain, wanting protection without giving up gain. They want a protection without giving up gain. Corporates with uncertain foreign income and payment. Investor managing exposure to foreign market. Speculators betting on currency movement with limited downside. Think of FS like insurance, like travel insurance. You pay a fee for the right to cancel your trip without a big loss. If nothing goes wrong, you don't need it. If something does go wrong, you can recover and cover your loss. Obligation. Forward and future, you're obligated to perform your right. Option, no. You have no obligation. High customization for forward, low customization for future, medium customization for option. Forward is traded on OTC, future on exchange, option on either OTC on exchange. OTC means out of counter, over the counter rather. Upfront cost, option involve upfront cost. Future, the cost is just the margin you pay if you move against you. And forward, usually no option upfront cost. Flexibility. Flexibility. Forward, flexibility low. Futures, flexibility low. But options have a high flexibility. Profit from unfavorable movement. Option allow you to profit from unfavorable movement. But future does not allow you to profit from unfavorable movement. Now, I've talked about forward. I've talked about futures. I've talked about options. Now I'm talking about currency swap. Currency swap. Currency swap. Currency swap. Let's assume you are on this platform and African chain maker brought you together. I want to do business with someone in Kenya. We can do currency swap with someone in Kenya. Someone is joining from Kenya. That person has a transaction in Nigeria. I do business also in Kenya. I can give the guy in Kenya Naira to do his business in Nigeria. And he can give me Kenyan shilling to do business in Kenya. So instead of buying dollar, converting to Kenyan shilling, and exposing myself to currency exchange rate, because in future, if I move Naira to dollar, and I take the dollar to Kenya, and I convert to Kenyan shilling to do business, When I finish and I want to move the money back to Nigeria, exchange rate can move against me. But if I do currency swap, the Kenyan shilling was given to me. The guy gave me 100,000 Kenyan shilling in Kenya, and I will pay him 100,000 Kenyan shilling in Kenya, and I will do transaction in Kenya, and I will make money in Kenyan shilling. The Kenyan guy in Nigeria is going to do transaction in Naira. I will give him Naira. He will make money in Naira. He will pay me back in Naira. Currency swap. But the challenge of this is that there must be two people coming together that have similar needs. In a currency swap is a financial agreement between two parties to exchange principal and interest payment in different currency over a period of time. The money he gave me in Kenya is a loan, and I'll pay interest. The money I gave him in Nigeria is a loan, and he'll pay me interest. At the beginning of the swap, the two parties exchange principal amount over life of the swap. They exchange the interest rate and re-exchange the principal at maturity. Currency swap are used to hedge long-time foreign exchange risk, especially for companies with ongoing cash flow in multiple currencies. They provide predictability and help mitigate both currency and interest rate exposure. A US company or a Nigerian company need 10 million euro for a 5-year project in Europe. Rather than borrowing euro directly, which might be expensive, it borrow $1 and enter into a swap arrangement with a European firm that $1. He wants euro as an American company, like the case I gave. He wants dollar as a European company. The US company pay interest in euro and receive interest in dollar. At the end of 5 years, both firms return the original principal amount to each other. Result: each company effectively borrow in foreign currency at a fixed agreed rate without being exposed to foreign currency fluctuation. What are the benefits? Hedge against currency risk and interest rate risk, access to cheaper financing in foreign currency, predictable cash flow in the needed currency, risk, counterparty credit risk if the other party default, complexity in structuring and managing, mark-to-market fluctuation in financial reporting, real-life analogy. Think of a currency swap as two homeowners in different countries agreeing to swap their mortgage payment. Agreeing to swap their mortgage payment. Agreeing to swap their mortgage payment in each other's currency. So each can take advantage of a better local rate while still funding the property abroad. The principal exchange is at initiation and maturity. Interest payment swap periodically, annually or semi-annually. Duration can be 1 year to 30 years, customizable, tailored to both parties' need, usually over the counter. Type of rate can involve fixed to fixed rate, floating to floating rate, fixed to floating interest rate swap between the parties involved. Between the parties involved. Who is the currency? Multinational corporation with long investment in foreign currency, government to stabilize reserve, bank to balance sheet management, for balance sheet management, large institution investor managing global portfolio. The difference, you can see that forward is best for short-term risk, flexibility, medium, cost is low, obligation is yes, used to lock in exchange rate. Futures, standardized short-term hedge, flexibility low, cost is marginal, obligation yes, use case, exchange traded hedging. Option, one protection plus upside, flexibility high, cost premium, no obligation, right to exchange at a strike price. Swap, long-term FX and interest rate hedge. Flexibility high. Cost, medium, low to medium. Obligation, yes. Use case, currency plus interest management. Currency plus interest management. The last one is natural hedging. What do you mean by natural hedging? Natural hedging basically means, as an institution, we do a lot of natural hedging. We have students who do certification program abroad, but they do certification program abroad, but we have to assist them. We have to assist them. We have to assist them to pay in Forex, but they give us Naira. We use their Naira to export and generate foreign exchange, and then use the foreign exchange to pay their school fees to the school in the US in pounds, in the UK in pounds, and to the US in dollars. Natural hedging involves matching foreign currency cash flow with outflow in the same currency, or diversifying operation across different regions so that currency exposure offset each other. The goal is to reduce the net impact of exchange rate fluctuation to the company without need for derivative contract. In natural hedging is needed to mitigate risk by aligning cost and revenue in the same foreign currency exposure to exchange rate volatility reduce. Simplify risk management. It avoids some of the complexity and cost associated with maintaining derivative contracts like forward and options and futures. Like forward and options and futures. Enhance operational stability, creating a balance between currency inflow and outflow, and this leads to predictable financial results. For example, if a European company generates revenue in US dollar through export, it might also source for raw material or services priced in dollars. Services priced in dollars. Services priced in dollars. The matching of both inflow and outflow in USD can naturally offset the FX risk without further hedging. Without further hedging. How does this work? Currency matching in revenue and expense. Revenue, a company earns in dollar. It arranges for its costs, like supplier payment, to be incurred in dollar. The gain in one currency in dollar through export is used to offset the exposure in the same currency in dollar through import. Geographic diversification. Establish production facility sales office or sourcing input in different regions, expose the company to various currency. Losses in one market might balance by gain in another market where currency moves in an opposite direction. In an opposite direction. Intra-company loan and pricing adjustment. Multinational company can use transfer pricing strategy to shift profits across subsidiaries in different currency zones. Internal financing, setting up intercompany loan in foreign currency can help offset exposure. This is common among multinationals. Imagine a US-based company that exports electronics to Europe and simultaneously source components from Europe supplier. How can you naturally hedge? The company earns euro from its foreign sales. The company earns euro from its foreign sales. It pays euro to its European supplier. Since both revenue and expense occur in euro, the company exposure to fluctuation between euro and dollar is reduced as the currency impact is partially cancelled out. What are the benefits? Cost efficiency, avoid fees and complexity related to derivative contract. Simplicity, streamline risk management by relying on existing business operation. Reduce counterparty risk. No need for worry about potential default of a counterparty in a derivative contract. And operational focus. Encourage companies to integrate risk management in their business planning and operational decision. What are the risks? Natural hedging opportunity, limited flexibility. Natural opportunity limit to the company operational structure, which might not always align perfectly with FX exposure. It can be dollar, and this one is euro. That means I have to convert. If I'm expecting to pay in euro and I'm getting dollar. Residual risk. It might not completely eliminate FX risk if the volume and timing of cash flow does not match. That means when amount I'm expecting is different from the amount I'm paying, or the amount I'm expecting is coming later than what I have to pay now. Operational constraint. Making adjustments can be complex, involving significant cost or being impractical in the short term. Real life analogy. Think of a natural hedging like balancing your household budget. If you know you will receive payment in a specific currency and have bills to pay in same currency, the effect of fluctuation in exchange rate on your overall finances is less pronounced. The inflow and outflow in the same currency naturally cancel out, much like having matching income and expense in your budget. When do you use natural hedging? Operational design allow it. When operational design allow it? When you have a long-term exposure. Cost consideration. There's a desire to minimize derivative cost and relative administrative burden. Many large multinationals incorporate natural hedging into their broader risk management strategy by aligning their operational activity, supply chain arrangement, and financing decision. In conclusion, remember I talked about forward contract, agreement to buy or sell currency at a fixed rate in future, help you lock rate and avoid unexpected currency fluctuation. A Nigerian exporter selling in Europe locking euro against naira rate for payment in 3 months. How about futures? Standardized contract traded on exchange to buy and sell currency at a sell price in future. It's more liquid than forward contract but require margin payment. A Nigerian importer hedging against expected naira depreciation, buy a future contract for USD. Option contract, the right but not an obligation to buy or sell a currency at a specified price before expiry. Provide flexibility, use only if the exchange rate moves favorably. Example, a Nigerian company buying USD option to protect against naira depreciation. To protect against naira depreciation. Swap, exchange rate flow in different currency between parties for a set of period, used for long-term hedging, often between multinational corporation and banks. A Nigerian firm borrow euro but swap it with naira with a German company that needs naira. Natural hedging, matching revenue. Matching revenue in the same currency to reduce exposure involves structuring business operation to minimize currency risk. A Nigerian importer might buy from Europe to sell commodity in euro to offset currency movement. The best currency hedging strategy depends on the risk level, the time frame, financial goal of a business or investor. A mix of forward options, swap, and natural hedging can provide a strong defense against FX volatility. Before I close, we have a weekly webinar holding today by 5 p.m. if you are into commodities like legumes, beans, cowpeas, and the like. You might want to join us by 5 p.m. That's in less than 1 hour. The link is already in the chat. You might want to join us. It hosts every Friday, and it's a free webinar on Zoom by 5 p.m. If you also want to learn about how to guide buyers, I saw someone dropping a message on getting buyer. We have a material called Eureka, Found International Buyer, and it shows you both through the manual and the video how to find buyers abroad. And these are also material we have: A to Z of export business financing, Eureka, find international buyer, export business made easy, and built to go global. As I conclude, I would like to say to everyone, in order to be able to survive the impact of this VUCA era, VUCA means era of volatility, uncertainty, complexity, and ambiguity, businesses need to understand the payment methods and foreign exchange management in order to mitigate country risk, in order to mitigate currency risk, in order to mitigate commercial risk, and thereby making the export business.
Okay, I think thank you so much, Mr. Bamidele. That was quite an insightful session. Let's give him a virtual applause. Let's give our thank you. Also, drop what out of the many insightful things he shared, drop one thing that stood out for you, one thing that stood out for you. And okay, now so we are open for questions, and if you have any question, you feel free to raise your hand up. I can already see somebody doing that. And you can also type in your questions in the chat box, and I am certain that Mr. Bamidele will be more than happy to respond to them. So let's have Joshua Ishola kindly unmute and ask your question, please.
Yes, thank you, moderator, for that opportunity. Doctor, good evening, sir. Good evening, everyone. I would like to appreciate you for that insightful presentation on this, particular, topic. I think in today's global economy, right, currency fluctuations are, unavoidable for any business that is actually involved in international trade. And then, of course, for me, companies that understand and actively manage, their currency exposure are better positioned for, to maintain their profitability and also to remain competitive. So, Doctor, I have some few questions for you. I haven't understood some of these complex, strategies, to mitigate risk. My first question is that, is it possible for a business not to hedge, even if currency risk exists? Is it possible for a business not to hedge? That's my first question, sir. My second question is that, so now, how do startups, because I want to believe that a lot of us are, some of us that are joining this program, some of us are actually startups like small, medium enterprises. So now, how do startups actually manage risks, differently from these large multinationals? Because I want to believe that startup doesn't really have, that access to all this complex hedging. So how do you think they can actually manage risk, with respect to currency fluctuation? That's number two. And number three, sir, what role do central banks in context to Nigeria now? What role do central banks, or let me say government policies, plays in actually, managing exchange risks, for companies? And also, sir, can a company combine multiple hedging tools for one transaction? Is it possible that a company actually combine a multiple hedging tools for one transaction? And the last one, sir, how do a company evaluate the effectiveness of their hedging strategy? Thank you very much, Doc.
I'm going to take them one by one, and I will answer because I was not writing. So what's the first one? Should a company hedge or not?
Yes, the first one is it possible for a business not to hedge?
It's possible.
Even if,
possible, you can choose not to hedge for different reasons. For example, there are businesses in Nigeria today that don't hedge because they have a lot of naira and they are trying to convert it to dollar to keep their asset in dollar. So they don't hedge. When they export, they will keep the dollar and will not hedge because it all depends on your strategy and your objective as a business. So you need to align your strategy and objective of a business on to take that decision whether to hedge or not. So it's very possible not to hedge. It does depend on the objective and what the business is trying to achieve. What's the second question?
Yes, sir. So how do startups actually manage risks? Because of course, I don't think most of them have access to all these complex.
No, they can get forward in their bank today. But what I recommend is, what I do most of the time, I don't use forward. What I do most of the time is, when I'm estimating, so for example, if I want to export, the rate now in Nigeria is about 1,006. If I want to export, I won't use 1,006 in my calculation. I will do a sensitivity analysis to check if this rate dropped to 1,005. Am I fine? 1,450. I want to give typically between 50 to 100 naira difference between the rate I'm using to do analysis of my profitability and the official rate, not parallel market, at the official rate. That way, significantly, I'm fine most of the time. In the last 5 years, I've only had issue once. And that was last year. And that issue was because in the course of that transaction, CBN in Nigeria took a decision that caused a drastic drop within the period of my transaction. But typically, within that period of 3 months, it will be it will move, but it will be within that bracket of 50 to 100, 50 naira to 100 naira, most of the time. But in some cases, it might move significantly, but it was because they took a decision which I didn't envisage. And of course, it affected, we had a little loss on the transaction. But besides that, I just ensure I go a little bit away from the official rate when I'm doing my estimation and profitability for a transaction.
Wow.
What's the next one?
Yes, sir. So is it possible for a company to combine multiple hedging tools for one
It's
transaction?
actually better if you can.
Okay.
Because of the cost, it's actually better if you can.
All right. Okay, so the last one is that how do a company actually evaluate the effectiveness of their hedging strategy?
Okay, I just told you now that my strategy basically is to ensure that I step away from the official rate about 50 to 100 naira per time.
Okay.
And I've reviewed over time. I just told you now that I've only had to pay, I've only been affected by movement in the last 5 years once, which was late last year, because CBN new window for FS trading. So basically it's to review, you have taken this decision and what is the impact for this transaction? You took another decision for the next one, what's the impact? And then you compare. So that makes you to know which one is more effective. Is it that I will not move? Someone says, is it 50 to 100 naira? Yes. Akweji, very correct. 50 to 100 naira away from the official rate, not parallel market. So if parallel market is 1,650, official rate is 1,600, I will be looking at 1,500 or 1,550 max. Does that answer your question, please?
Yes, sir. Thank you very much, Doc. Thank you, moderator.
All right, thank you.
Thank you. Thank you.
Thank you so much, Dr. Bamidele. So let's have Paul Adinka kindly unmute and ask your question.
Good afternoon, everyone, and good
Good
afternoon,
afternoon.
Doctor. Thank you very much for that wonderful teaching. So I just want to ask this question. I want to find out if it's an example of a natural, is it natural hedging, yeah, that you mentioned. So for instance, I want to buy some goods from a company in Nigeria, and I want to export the goods. But I have a foreign partner who we are doing a business together. But the company I want to buy the goods from has also a foreign account in probably USD. And instead of me paying in Naira here, I tell that my partner to pay that company in Naira, in USD, such that when the proceeds of the transaction is coming, it still also comes into my own account in USD. So I'm not exposed to Naira in any way. Will that be an example?
Yes, it's an example of natural hedging. The only difference now is that instead of you doing a transaction that makes you to receive dollar, you took a loan in dollar.
Okay.
You took a loan in dollar, maybe from a subsidiary or from someone.
Yes.
They are going to also pay in dollar.
Yes.
They see a natural hedging because you are receiving the same amount of currency you are going to be paying. So it's natural hedging. Is that okay? I can't hear you. Maybe you have issue with network. Can we hear the next person?
Yes, that's fine, sir.
Okay,
Thank
so
you very
All
much.
right, all right, all right.
okay, great. So we have one question from Irene Barnabas. She said, my challenge is that I know how to source for buyers, but most of them require me to show proof of previous transaction, which I don't have. I have been looking for an existing exporter so I can partner with them, but to no avail. I think he's trying to ask for a solution or advice to that matter.
Even though that's not the conversation we're having, one of the way, the real concern of that buyer is to confirm if you can deliver. That's the real concern. Now, whenever, for every policy, there's an underlying philosophy. For every policy an organization have, there's an underlying philosophy. So if the organization says, we must see your history before we deal with you, the philosophy is because they want to know if you can deliver. So the way to solve that problem is the product you are telling them you want to sell. Do you have it? If you have it, do a video of the product in the warehouse. Send them pictures. See the goods. Send them sample. See the sample. We have this product available. We will ship within so period. This is the evidence that we have it. If you're able to demonstrate to them, some will be convinced and say, okay, let's give you a trial because you have the good on ground. We can see the video and picture. Have I answered your question, please?
Oh, yes. So next person we have here is Mahama Haruna. Kindly unmute and ask your question.
Hello, good afternoon.
Good afternoon.
Prof, I am a startup and I want to scale up. So what are the ways I can write a nice speech and attract investment into my business? And I want to have 100% control of my ideas. How do I attract investment without selling my control away?
Why do you want to have control when you don't have money?
Prof, sometimes when people you know the direction you are taking, and you know what.
Let me tell you the way to do it. Let me tell you the way to
Okay.
do it. That business is an idea you have. I'm sure there are other ideas you have that you have not explored.
Yes, sir. Yes, sir.
Good. Use this business to raise money for that one by selling the shares to people who can give you money. So when you raise money from this, you use it to fund other dreams you have that you have control over. But if you want to hold on to this when you don't have money, that your dream will not see the light of the day. So whoever is bringing money, give them the share they want. Whatever profit you have there will become a capital you can use to fund other dreams you have, and then you have control over that later. But you see this one, you might have to let go in order to be able to raise money for your other dreams. Does that make sense?
Yes.
All right.
Thank you, sir.
Thank you so much, Mr. Dr. Bamidele, sorry. That would bring us to the end of our question and answer. We don't have any other additional questions. I can see someone in the chat box saying they give you 5 hours more to go. And some participants are requesting if they can get the slide to the presentation. I don't know if that's possible.
No problem.
Okay, great. So we'll share the presentation slides as soon as we receive it from our trainer, and then ensure to register for his session, which is also going to be a build-up and another insightful session. So if you have time, do well, register. The link is in the chat box, and join the session in the next 40 minutes. So it's going to be like we'll be dropping off from here to the next session. So before we let you go, sir, so you are prepared for your next session, Doctor, would love to take pictures with you. So let's have attendees kindly turn on your cameras. Let's take pictures and show you, share it on LinkedIn, on different platforms. post it with the key takeaways or what stood out for you on ensure to also tag Dr. Bamidele. Definitely. I am certain he's going to engage with them. So team members on the call, please let's take snapshots of everybody. I can see Sanusi's, Erasto, Apeji, Mahama. Please, I get more persons to turn on their cameras. Great. Oludare, Willard, thank you so much. Abdurrahman, let's get more persons. Ade Dapo, great. So let's get more persons turn on their cameras. Thank you so much. Jesu Tola Pamudu, thank you so much. So team members on the call, please let's take a snapshot. I can also see Doctor has also dropped the link again in case you missed it. He's having another insightful session. So do well to register and just move from here to the session. Thank you so much. So in 1, 2, 3, let's give our very best smile. Okay. Thank you so much, everyone. Thank you so much, Doctor, for quite an insightful session. We are very grateful. Thank you so much for always coming to share with our community members a wealth of knowledge and expertise. Okay, so moving on to the next segment of today's event, I'll be calling up Bushra Abdurrahman, who would be sharing on what we have, additional things we have for you as it pertains to the SCP program. Hi, Bushra. Over to you, please.
Thank you so very much, Anna. And before I proceed, I would like to thank Dr. once again. I can see still on the call. Thank you so very much, Dr. Bamidele. Thank you for being a very valuable friend to the organization. And thanks for always showing up for us. Thank you so very much. And I'm sure our community members are indeed very grateful for the knowledge in which you've been giving to us so far. Thank you. Okay, so hi everyone. I'm sure we had a very great session here today, and we've actually noted so many key takeaways which we'll be implementing in our businesses as we go back after today's session. So Anna, please put up the slide. So while this slide is coming up, I want to discuss the next step which will be happening. But then this is specifically tailored to our SCP participants, people who participated in our Scaling Experts program in the last cohort. Please, if you are one of the SCP alumni, you participated in the last cohort, kindly identify yourself in the chat box. Let's say, kindly identify yourself in the chat box. So please, everyone, this is not a way of saying this session is for SCP sessions, it's not for anyone. No, it's just because this comment announcement I'm about to make is tailored to the SCP alumni. But this session is open to everybody, and very soon you would also be a member of our SCP community when the next cohort comes up. So this is to announce that next week Tuesday we'll be having our first ever open the alumni town hall meeting. So this town hall meeting is like our community meeting. We are all coming together as a community to have a discussion. It is not a session whereby someone is training us, where someone is facilitating us. It is it's going to be a relaxed atmosphere where we interact with one another, get to know each other better. We talked about our challenges. We discussed what have we tried what we've tried that has been successful in our business, and what we've tried that we think like is not successful yet. And then we get to learn from other people what are their lessons. And also we also help us to get to know one another better, and also get to know who are the people you need in your sector, who is already doing what you are doing, and who you can collaborate with. So it's going to open a door for partnership. It's going to open door for new opportunities, and it's also going to open door for visibility, because during the session, we will get a chance to talk and introduce ourselves, and we get to know one another beyond just dropping chats in the group. But this time around, we are putting a face to our names, and also we are able to define what our business is about to other people. So this session is coming up next week, Tuesday, 22nd of April 2025, and we are going to leverage the Zoom, this Zoom platform as well. It's going to be a virtual session. Hopefully, as time goes on, we will start having a physical session. Yes, let's look forward to that. But for now, it needs to be a virtual session. The link to the session will be shared to us on our WhatsApp platform as well as our emails. So please let's watch out for our WhatsApp for the link in our WhatsApp groups and also in our email in our inbox. So please let me know how you feel about this session. Are you excited for this upcoming session? Are you looking forward to it? And what do you intend to give from the session? Please, if you're free, you can raise up your hand. I'll allow you to speak, or you drop it in the chat box. Thank you. Let me know what you are looking forward to seeing in the session, and also let me know your how excited you are for the session. So we have 2 minutes to do that. So while we are on that, Anna, please kindly pull up the poll. We have a poll which is open to everybody to fill. Everyone on this call, please take your time to take a minute or two to fill out the poll, which will be launching on the screen soon. Thank you. Okay, I can see we have our alumni on the call. I can see Paul Adenika said is an alumni. Abdurrahman Abdulkadir is an alumni. Adepeji Adenike is an alumni. So I can see that. We look forward. Oh, Sonny said he looks forward to learn from. Oh, we also look forward to learning from you, because this time around it is we who are actually looking forward to learning from everyone. Hannah said, quite interesting, looking forward eagerly. Yes, we are also eager and excited to meet with you as well. So I can see people already filling the poll. Currently, we have 13 responses. Please, let's keep it. Please, let's keep it coming. Let's keep it coming at least. Let's get 70% of the persons on this call to fill out the poll. Okay, so please, as we take our time to fill out the survey, I'm still also looking into the chat box. Okay, Umuma Gaji says she's an alumni. Wow, that's interesting. Gadi Banda said is also an alumni, as well as Timothy Emmanuel. Okay, thank you, Famous. You said you are done with the poll. Thank you. Please, please, let's keep it coming. We have 40% responses at the moment. Please, let's push the response. Let's get to 60% so that we can move forward. Please, if you are here to answer the poll, please quickly do that. It only takes about 30 seconds to a minute. Kindly take it now so we can wrap up with the session. Thank you. We have 44 responses at the moment. We can do better, please. Let's do it. Let's do it. Let's do it. Okay, currently we have 46 responses, 47 responses. Please let's keep our responses coming in. Elwin Anuro said in this chat box that great session with the expert doctor and everyone on the call. Thank you, Elwin. The expert doctor is always willing to share his knowledge with us, and we appreciate that so much about him. Also look forward to the session that is happening this evening. Get the link in the chat box and ensure to attend. And I'm sure you're going to enjoy this session as well. Moses said, I am an alumni. I really enjoyed the session. Thank you, Moses. I'm sure everyone did. So please, currently we are at 50%. Let's keep it coming. We are going to 60. Let's push this to 60% so we can round up. Thank you. Thank you, Victoria. So please, let's fill the poll. We still have it on our screen. If you've not filled out the poll, please, let's quickly do that. We are dropping it now. We're about to drop the poll. Please, let's quickly fill it out. Are you just coming into the session and you can see the poll on your screen? Please take a minute to quickly fill it out. While you're about closing out on this, please let's fill it. All right, thank you, everyone. I can see the poll is moving. We are currently at 54%. Please, let's not relent. Let's push this. We are going to 60%. Please, let's push this. Oh, you say you can't find the link to the poll. The poll is just on the screen. Please check your screen. The poll should be on your screen. It's not a link. It should just be on your screen. So thank you, Chukwudi. You said thank you as well. I read your chat. Said thanks for the session. Thanks to you as well for joining. And we look forward to seeing you next week. Okay, so back to the town hall discussion. So the town hall is coming up next week Tuesday. Let's not forget. And also, please let's remind other SAP alumni who are not on this call today to ensure that we all are in the session by next week Tuesday. Please let's communicate with everyone to join the session. And we look forward to seeing you all at the session. Thank you so much, everyone. At this point, I'll be handing the mic back to my colleague, Anna Mambula. Thank you all and enjoy the Easter break and have fun. Thank you. Over to you, Anna.
Thank you so much, Bushra, and a big thank you to those who have been able to, that has helped to fill the poll. The essence of the poll is basically to help us know how impactful the sessions were and how best we can serve you better. I can see persons are still filling the poll, so I think I'll leave it on for the next 30 seconds to enable more persons share their feedback with us. So while we still have the poll coming up, I'll be calling on the membership team here at AFC. I understand in the beginning we see, oh, we're helping entrepreneurs, we're doing this, we're doing that, but how do you get to maximize the many ways you can grow and scale up with AFC? You have to join our community. And to do that, I'll be calling upon the membership coordinator, Iberi Oko, who would be taking us through the membership drive. Over to you, Iberi.
Thank you very much, Anna. Good afternoon, everyone. Allow me call you exporters today. Well done and congratulations for having this insightful training or session today. It's not everybody that has this opportunity to do this, and that is what AFC is committed to doing for agripreneurs in Africa. We continue to share this knowledge with every one of you and ensure that we are all, updated with what is going on in the agri-food African ecosystem. We've heard about the community, the AFC community, so I don't want to bore you about us already. Bushra has done a lot of work on that at the beginning of today's session. You already know that we support agripreneurs with knowledge resources, funding resources, networking opportunities, collaborations, and the likes. So if you are not an African food change maker, you have not joined our community, please just indicate in the chat box. Let me even know if I have an audience here. If you are new, if you never joined our community and you would like to join, this message is for you. As long as you are an agripreneur operating in any country in Africa, any country. Currently, we are nearly 7,000 agripreneurs from across 48 countries in Africa, and we are growing. And that's the community for you. And when you join the African Food Chain Makers community, you have access to nearly 7,000 agripreneurs doing what you are doing as well. And you see that you can easily connect. You are running a business here in Nigeria, you can collaborate with a fellow agripreneur in Kenya, in Nairobi, in Uganda, in other parts of the continent. And just like the example that Doctor gave for currency swapping, where else can you find those kind of collaboration opportunities if not the African Food Chain Makers community? You can find people that you can collaborate with in business and practice this currency swapping as long as you maintain everything that you are supposed to maintain, regulatory and the likes. So if you are an agripreneur operating your business in any part of Africa, then you are welcome to join us. If you have been operating for at least 6 months, you own this business, or you hold a high position in your company, go to the link. My colleague will drop the link on the chat box, www.afchub.org. Go to that website and click the join the community. And every question that will be asked of you is very, very necessary for us to know you more and be sure that you qualify to join our community. Very, very importantly, while you are joining, you need to have your certificate of registration close to you as a soft copy, because you will need to upload it. We need to be sure that you are a business that can be verified. We can find you anywhere. You have an address, okay? Just to ensure that we create a safe space within our community. And ensure also that you have links to your social media accounts, Facebook, LinkedIn, Instagram, or even a website for your business, because there's a part that you will have to include this information. Because when you join the AFC, you don't get verified immediately. You join, we verify you. We have to go and search for you, check your digital footprints to see that you are actually doing something in the agri-food sector. And once we confirm that, we verify your membership. So please have your links, your website link or social media links handy, your registration, company registration handy, have your logo handy and your picture. These are the things that you need to upload when you are signing up. And once you sign up and we verify you, you have access to numerous resources on the hub. Apart from connecting with like-minded agripreneurs, you have access to the marketplace where you upload your product for visitors on our website to see and connect with you. You see information about funding opportunities, capacity building, fellowships, networking events and the likes that you can take advantage of. Don't miss this opportunity. And very, very importantly, this is what we do again for our members. I heard somebody asking a question about investment. Next week, Thursday, 3 p.m., we're having a workshop on agri-funding, and the partner of Sahel Capital will be present to teach us how to attract investors for our businesses, what investors are looking for, how do we prepare for these investors, how do we negotiate with these investors. I don't want you to miss it, whether you are a member or not. I'll put the link on the chat box right away so that you can register and you don't miss it. And if you are not a member, join us today so that you will get these alerts, these notifications about programs, initiatives that will benefit your business. Thank you very much for listening, and I'm looking forward to welcoming you. Have an amazing holiday. Cheers.
Thank you so much, Ebere. So I don't think you need any additional convincing for you to join our community. So you can go straight to www.afc.org. Definitely the link is there on your screen, and you can apply to join our community. Like Ebere said, we look forward to welcoming you, and we look forward to helping you scale and expand your business with, beyond your region and beyond Africa. Okay, so we're moving on to the next segment. We have our next steps announcement is we have our agri funding. So We'll be also dropping the link to the Agri Funding series. It's a session you do not want to miss. And we hope you would register and join us for that session. We look forward to having you join our communities of across over 44 African countries. We are also open and happy to receive your feedback. If you have ways we can improve, serve you better, it's something we always look forward to. We have to get feedback to grow and expand, definitely. So send your feedbacks to info@afc.org, or you can reach out to us through our WhatsApp line. And also do not forget to follow us on all social media platforms: YouTube, Instagram, X, Facebook, YouTube, LinkedIn, TikTok. We're literally on every social media platform you can think of. So follow us there so that you can stay up to date. And also do not forget to apply for the BRACE program if you have not participated in the BRACE training. And also you can feel free to subscribe to our newsletters. That's where you can get up-to-date opportunities and stay up to date with all the information and trainings and every single thing you can get with from AFC. Subscribing to our newsletter platform is another way. And on behalf of everybody here at AFC, we want to say a very big, massive thank you, especially if you've joined us on time from the beginning of this session all the way to the very end. Thank you so much. We hope it has been an insightful session. We hope you've learned a lot. So you can go ahead to send the key takeaways from your learnings, screenshots, post them, tag us, tag Dr. Bamidele, and we'll do well to engage, repost, retweet, or every other thing we can do to support and boost your visibility on every social media platforms you tag us from. So till we see you again for the next edition of the Open Export series, do have an amazing rest of the day and a great month too. So bye everyone.